Welcome to Trading Lounge and the US Indices for the 23rd of February. For the we'll look at the S&P, the Nasdaq, and some stocks. And with the S&P here, this count coming up through here, I've got it counted in two ways. One of them is this way, and will come down for a wave 4, which I don't think is the case. The other case is that we have this blue wave 4 sitting where this blue wave green is here. So in that instance, it would look like this here, but I'll just scroll this in so you can see. So wave 4 here with 1 and 2 here, 1, 2, 3, 4, and 5 here for wave 3, and wave 4 here. And then we're looking at also this wave here. We've been looking at this in two ways here as well. One in that we've got green wave 1 here going back for green wave 2 and then going up for green wave 3. The other one was counting this a little bit differently here, where we had this wave 4 sitting here and we still have a little move to the upside here. So with the Nasdaq, it's pretty much this wave 2 happening here. So if I can just bring across the Nasdaq just to show you that. So with the Nasdaq, a bit of a weird count, but we've got 5 waves up here for 1 and 2 and 3 and 4 here, and then up for 5 here for 1. And then we'd been looking for, well, we knew we had 5 waves here. There's an A wave, a B wave, and a C wave here. That's just about finished, I'd say. So we don't need any of these in here, but I will just count this quickly. So it appears we've got down for 1 here and the back for 2, 1, 2, 3, 4, 5. There may be one more move down here just yet. Well, but it looks like a nice 4th wave there. I'll have to pull that apart. I think that could be in at that point. But we're very close. There could be one more low for that. But we'll look at the trade setup for the S&P 500. But the takeaway here is that the market's moved up and moved back to the box of 61.8%. And then we can move up from that point. We could also perhaps look at moving in on this just with the simple breach of the trend line here, but that would be a bit, there's risk in that, but it works a lot of the time, doesn't it? So yeah, just allow that to become support rather. So you know, when we're looking at a trend line, for instance, down through here, when the market comes up through that, it'll bounce back off it, and then it'll eventually go through it, and it'll come back and test it, and then you'll have that high there. You may have a second high to work with as well. That can also work as well. And then push up from that point. So it's really a classic trading levels pattern, but on an angle here for that. Alrighty, so that wave 2 for that's sort of settled in. The S&P hasn't pulled back that much in that regard. I think on the hourly chart we're counting both counts here, so this is where we were yesterday. But for a zigzag, while a wave 2 correction has an ABC zigzag, so we'd be looking for 1, 2, 3, 4, 5. 1, 2, 3 is a counter trend, and then another 1, 2, 3, 4, 5. It's a little bit difficult to count this. It counts sort of better, a little bit more sort of complicated really. Yeah, so it's hard to count it as an ABC. It counts kind of better as a wave 4 in this instance. A bit like the Russell, if I can just bring the Russell up here just to compare things a little bit. So this is the Russell here, the move up that we've also been tracking, and we could track this up as 1, 2, 3, 4, 5 for 1 and 2, then 1 and 2 and 3 and 4 here. And even though it's just may have touched the high there, so wave 3 here, and then looking at this as an A and a B and a C. So in this case, we've started the next move up through here for this. So yeah, that's corrected in that case. But once again, we're looking at that as a wave 4. So we've got a couple of different ways to look at things. So really, it comes down to a bit of a trade setup at that point, I'd imagine. So if we can just go to the tick chart and just draw this out a little bit. So there's different ways to count this, and they both work. You could count it down as an A wave to here or an A wave to here for this. But either way, what interests me most is not so much all of this, but this here, this leg here that interests me the most. So on the tick chart here, we can count this down as 1 and 2 here, and then 3 here, an A and a B and a C wave here, a little bit rough and ready. And we could count that slightly differently, and then down for extension in wave 5 here. So if the market was going to go down any further, then, oops-a-daisy, where's my S&P gone? So if this was going to go down any further, because I just want to look at both sides for a moment, so we could look at all of this 5-wave structure down here as wave 1 here. Probably not the case by looking at the Nasdaq, but we never know. And then going back for wave 2 here into the 61.8% retracement level. Okay, so from that point, it could also, come down lower at that point. So what I was thinking is that from this low here, we could look at this as wave 1 here and 2 here and 3 here, and we've got wave 4 coming into play here. It might come down a bit further, whatever, and then wave 5 to the upside. All right. So, and that after that, if this was going to be an ABC correction, then we'd have to look at this as an A and a B and a C wave to here. So this would be the A wave, the B wave, and the C wave coming in here. I mean, of course, we can count it as wave 1 and 2 and 1 and 2, and then even 1 and 2 or a third wave in here. But my point being is that if we just focus on, this is really for, short-term traders. So if we look at this here as 1, 2, 3, 4, 5 for 1 and 2 here, and then going up for the third one, once we get that top in here, roughly around the 61.8%, say just as a working model, then that high becomes really important, because that would be 5 waves at that point. So as an ABC, it wouldn't be going any further. So we want to be long above that high. Okay, so once that high comes in, you'll only know it comes into place because it comes down and bounces off the off this level here, and then there may be a second high, maybe further down. So, but that becomes a reference point as well at that point. And then if the market's going to go up at that point, then you'll be long at that point. So that puts you above the 61.8%. We've taken into account this particular structure here. And, I'm looking at this as wave 1 down here and 2 here, because we haven't really reached the 50-60% retracement level here, but we have on the Nasdaq, which is this one here. So we've reached it down here. So that's a good sign, isn't it? So that's a positive sign that, that's not going to go down any further unless we've actually got a different top up there, unless we call this wave 4 here and blue wave 5 here, and we have a top in play. So that's why we need to be a little bit careful. But based on that, then we should be pushing up from here, and just to get that nice and safe, then using a little classic trading levels pattern above here, the arrival, the reaction, the first high above the level, and then the ABC pattern, taking that high and the second high here, that will keep you safe at that point. So that's the way that I see it. So just going back to the, where are we here? Go back to the 4-hour chart. So I'm thinking we'll just move that across to the side here, and then we don't need this and this. We don't need that. So we're thinking now, we'll leave that there, but we're thinking now that there's a possibility that wave 2 can be in place there. And what we're waiting for here now is the arrival, the reaction, the first high above the level, some type of little ABC pattern, and then a push up from that point. That means we can take this high, which we talked about yesterday, bring that over down here to get a better price at that point, and that's where we'll sit at this stage. So we need this 3.9 as the support. And is it support yet? No, it's actually bearish, and one would actually argue the case for going short below here because we've come down, we've had the arrival, the reaction, the first low below the level, this move here, and then this move. So it's coming back to retest it here. So it can fail from that point and drop down here further. But I don't like particularly trading against the trend unless we've got an evidence of, you know, really nice impulse wave, and we don't have that, so I'm taking that away. But just to let you know, and you could do that if you wanted to at that point. That's the long trade setup. Let's have a look at Facebook. So with Facebook, we turned a bit bearish yesterday. So we had this one here as wave one moving to the upside. It could still be valid, and I still want to talk about that today. So this move up here as wave one, this one here, but I've dulled it out now, and coming back for wave two here, and then up for one and back for two, so to speak, and pushing up higher from that point. So I do want to talk about that, but otherwise we need to look at this here as wave three over here, an A wave here, an A and a B and a C wave here for the B wave, and then down for one, back for two, down for three, four, and five here to finish this move. Or it can finish in three waves here as well. So where this can finish in an A wave here, a B wave here, and a C wave coming into the let's just call it the 250 here. So just to recap that, this can move down as an A and a B and a C to the 250 and then move off. It can also be wave B here with 1 and 2 and 3 and 4 and 5 coming here for wave 4, being lower here. And also too, my original count, I had this as wave 1 sitting here, coming back for wave 2. So I do want to talk about that for a moment. So we're going to go from the daily chart to the tick chart. We'll need to bring in more data. So we got wave 1 up here and wave 2 here, and then I'd counted 5 waves up there, a bit dodgy. We had long trades here, we've been stopped out. So is it possible that this can still be wave 1 up here and coming back for wave 2 here? Well, I think it could be, because we can look at this here as 1, 2, 3, 4, 5 for the A wave sitting here, the B wave here, and then it's a bit lanky, but 1 and 2 and 3 and 4 and a little bit dodgy in the 5th wave here, but having the low in place here for this. That's the 61.8% retracement level, which it burned through yesterday, so I don't need that now. I'll leave that there because we've got to compete against that again. So yeah, look, the bullish move is still intact, but obviously if we take this low out here, then that's the end of that. That's the end of our ABC pattern at that point. So let's just see if we get a nice 5-wave structure to the upside here to start with. And then if that's the case, we get an ABC pattern here. Then we could look to build in a long position on that high there once we've got those first 5 waves in play. So that's still a possibility. I don't want to short it because we'll be shorting it into the 250, and yeah, not good. Too much support. Okay, so that's that. With Square here, I've just moved the stop up a little bit. So we had the stop here, I think yesterday, or the other day. So we've moved it up under this low here. Yeah, let's just see if we push up. So the entry was around the 230 here, and we're looking at 5 waves moving up into this space here. So yeah, I probably want to push up higher, but just tightening the stop right up. So, and Apple. So with Apple here, this is a tick chart, and just in a nutshell, we're looking for wave 3 over here with an A and a B and a C wave here. So it's unfolded nicely. So yesterday we were looking at wave 3 here, and we're looking at wave 4 to pull down, wave 5 to pull down, sorry. The only hitch with this, as I mentioned yesterday, is that I've taken wave C from here, the top from this point here. I'll put that over here, but that was the actual top here. But all of this here was all spiky and a bit dodgy. So I'm going to go with, and the reason I'm going to go with this one here for is because I've got the third wave here, which is nice and long, and that would leave wave 1 and wave 5 roughly the same length, and that's what we'd be expecting out of wave 5. So yeah, let's just take a closer look at this now. Looks like we're still one wave short, doesn't it? So if I move this over here, has risen pretty high. I'm not worried about that spike, but I will look at this here as 1 and 2. 1, 2, yeah, I'll have to look at that as 1 and 2 and 3 and 4 and 5 here. So that all of that's really just the third wave here. So the fourth wave should pull back to the 40% mark, which is pull back to the 50. We can suck that up, so that's sort of okay-ish, but it does leave, if we count this here as, oops, daisy, as 1 there, 2, it may not be the, maybe it's all done and dusted, but we'll just see. We should get one more in here, but like I say, things never finish the way that you want them to. Well, sometimes they do, but a lot of the time they don't. That looks like it's still got another move up here. I mean, if this is an A wave and a B wave, then 1 and 2 and 3 and 4 here, and then that would have to come up here once it's done for wave 5. That will bring us into profit-taking number here, 28. So that's important. So we could use that to go long on, because we shouldn't get more than that. So let's just say that that pushes up, which it should do, because it should be higher than this, if that's 1, 2, 3, 4, 5. So that will give us the first high above the level here. And then we should come down from that point. But at the same time, you can go long above that level there. Because, so that's the A, the B, and the C wave to that point. I don't think I'm wrong in here, unless we've got 1 and 2 in here. No, that would be 3, 4, 5. Yeah, so I suppose if it crosses back over below here, on top of wave 1, then it's got overlapping wave structures that's down. It just seems like there's one wave short, that's all, but it looks really bearish here. But probably the A wave, the B wave, and the C wave down to here, and then that push up into that space. So I'll remove that. That definitely looks like the go. So anyway, we'll just chill on that, but at the same time, at the 128, a nice support on 8 would be the move up. So even just doing half a position here and then looking to add on top of the 30 at that point would be the right thing to do. If you can work out 5 waves down here, then the 125 is the level that we're looking for. That would be the low, so buying it there. And also too, copy that, the 2650 is also important as well. It's just the halfway mark between 5 and 8. So the Fibonacci numbers 1, 2, 3, 5, and 8. And we could also bring in group 2 here, can't we? So into the 127.20 area here as well. So that's Apple. So the next one is Tesla. So we've normally been looking at the tick chart, and we will look at the tick chart again as well. But I thought a bit of an aerial view today would be nice. So from wave 2 low here to wave 3 here, top here, this is roughly, the 700 is roughly the 38.2% retracement level. And so far we're looking at this as an A wave, a B wave, and a C wave down here. So with that in mind, we'll go to the tick chart and we'll fossick around and so on. So from the top here's wave 3, an A and a B and a C wave here. So the C wave will be 5 waves. So we need to look at this as 1 and 2 and 3 and 4. And now we have to look at wave 5 here, extending down a bit further. So my best bet is wave 1 here with an ABC for wave 2. And then down for green wave 3 here, which will be 1 and 2 here. And then all the way down for 3 here. 4 and 5 coming into play, and then wave 4 here that can pull back to the wave 4 of 1 lesser degree, and then wave 5 coming down to our 38.2% retracement level here to roughly the 700 sort of area here, something of that nature. Then we would need to see 5 waves up through here, right, to confirm that there's a change in trend, and then we can look at the pullback here. And we can look at getting in here for that on the B wave, or if you can count 5 waves in the C wave, then you can start to build in there. There'll be also another little 5 waves in here, which you can do the same. Whoopsie daisy. Another 5 waves in here that you can do the same with as well here. So you can move in over here for that as well. But it's nice to have that 5 waves in that direction, because even if it was just an A wave, a B wave and a C wave up here, that way at least you can get close to break even. If you can manage your exposure better rather than just buying on the low here, in case, because this 5th wave from blue wave 5 here to blue wave 4 to blue wave 5 here is extending in the 5th wave. So that could also bring in the possibility that this 5th wave, green 5th wave here, that could also extend as well. That would be its fingerprint or footprint or DNA or whatever. So you just need to be mindful of those sorts of things. Lending tree, no change here. As you know, we're calling in a bit of a top here and we're looking for a pullback. So that's all playing out okay. I won't go into the tick chart there, but just wait for a few more days to see how that plays out at that point. It could push up there as well. That's why I better check the tick chart on that. Google here. So with Google here, we're looking at wave 1 and 2 here, 1 and 2 here, and up for 3 here, and pulling back for wave 4. And it looks like that's kind of started here already. We've taken a little bit of percentage off the off the top there. We're going to leave the stop out of the way. We'll allow wave 4 to play out here, and I'm quite comfortable to move that stop here, because the reason I'm comfortable to do that is because we took percentage here. So yes, we'll look to get back in on this. We'll just allow this corrective pattern to play out here further. It should come down further now that it's overlapped this low here. So we've got overlapping wave structures. So yeah, we should see further downside in that. Don't need that there anymore. And we'll look to move back into this after this correction has given us a setup on that front. I don't need that wave 4 there. I see what I've done here. Yeah, I've got 2 counts going here. I'll leave that there for the time being. And Amazon is the last one. So with Amazon here, we'll just go back over the bigger picture because we made a change the other day. The change was that we had, wave 3 here with an A, B, C, D and E wave here to make wave 4 over here, and then looking at this as wave 1 up here, which was plausible because we could look at it as 1 and 2 here and 3 and 4 and 5 here, and still possible as well as 1 and 2 and 3 and 4 and 5 for the A wave, the B wave and the C wave coming down through here. But I just thought it might count better if I make the triangle a bit bigger, so having wave C here and wave D over here and then wave E here. Yeah, I'll figure that out, but I just think that either way, whichever way we look at it, this from B wave here to C wave here, we need to count 5 waves down here. And because the gap is here, that would be the third of the third. So that would make all of this from this point, from that point down to that point, as the third wave. So this will be the fourth wave. And then a fifth wave to come down here a bit further to finish off that. And then we would also need to see our little 5-wave structure to the upside here, and when the pullback, and then we can move into the market. Okay, so just getting our timing right, just in case it gets away on us. And because there's other ways to count this. There's a problem here with an overlapping wave structure. So it's possible to count this down as down for 1, back for 2, down for 1, back for 2, down for 1, back for 2, and then coming into a third wave here, because it is moving quite swiftly here. So we just need to keep an eye on that. It's possible that it could come down further at that point. So I'll just get to the end of this 5 waves, and then we'll just start to monitor it at that point and see if we start getting impulses to the upside, and then I'll be able to safely take us higher at that point. We just need to work out that we're not just going to get an A wave, a B wave, and a C wave here, and then down again from that point. So we can trade that up here, but we just have to manage that exposure there. Alrighty, that's it. So thanks for tuning in. Much appreciated. Cheers.